Alright folks, welcome back. Today we'll be looking at how I take most of my trades using divergence and how you can spot liquidity sweeps and not mistake them for market structure shift. I'm just going to go ahead and say this. Stop using the RSI indicator for divergence. Instead, use this. First, you want to find a relative for whatever pair or index you are trading. By relative, I mean family. For example, since I trade Nasdaq, its relative or family is going to be S&P 500 or US 30, but I prefer S&P 500. If you are trading GBP USD, you're going to use the dollar index or Euro USD. So you are going to use the second pair, which is the relative pair, to locate divergence between the two. So before I show you my live trades, let me explain the logic behind divergence. So let's say you have a level of liquidity. This can be a normal 50-minute sweep, or the low of the day or high of the day, including the low of the week or high of the week. And also, sometimes you can use a fair value gap. You want to look at the pair or the future index that you are trading with its relative simultaneously as it's approaching the level. What you'll see is that one of them will take out the level while the other one fails to take out the level, but both of them will form a market structure shift, showing that they are reversing. When this happens, you have a clean divergence. Let me elaborate. Don't forget that this level is defined by the previous swing points, which can be any of the things noted in this green box. So as you can see, Nasdaq made a higher high, which is also a sweep of liquidity, while S&P 500 is failing to do so. Because these two are families or relatives, and because they are positively correlated, they are supposed to do the same thing. Because one of them is making a higher high and the other one is making a lower high, that forms a divergence, which is also considered as manipulation. Because this happened, you shouldn't assume that Nasdaq broke structure and now is retracing to continue up. You will be falling for the manipulation. So instead, you can anticipate to use one of the models to short your pair or your future index and target the low-hanging fruit. So the problem about using RSI for divergence is that it prints at the close of the candles, which becomes inaccurate. So you are most of the time going to see the divergence afterwards instead while it's happening, because the price line will shift or sometimes it will reprint. So now it's inaccurate. So let's jump to the actual charts. So I'm going to go through a couple of trades that I took recently using the same concept that I just showed you. We're going to start with the one that you see in the intro. That's a trade that I took 2 days back, which is on the 16th of December. So let's dive in. So first thing that I saw is that we had high impact news at 16:45. In ICT times, that's 09:45 in the morning. Before that, I was just watching price. So you have to understand this about news events. They're gonna use them to manipulate price or move price. Since they hadn't manipulated price yet, I was anticipating them to use the news events to do it. I want you to remember this because it's very important. The market is more likely to follow the direction of the previous day. In other words, it's more likely to go in the same direction that it's coming from than to just reverse. That's where the phrase follow the trend comes from. If you ever get confused with the daily bias or you don't know how to decode the daily time frame, try following the previous day's direction. Never ever think that price is overbought or oversold. It's more likely to continue in that direction. If you keep on trying to catch the peak of the trend, you're gonna get liquidated and start kicking your dog. Trying to catch the peak of the trend is like trying to be right or telling the market what to do. You're not here to be right. You're here to secure the bag. So I show up every day at 2:30, which is 8:30 with ICT times. So the first thing that you can see is that we have been bearish since the previous day. So if you are bearish, any movement upwards is manipulation. SMC is about price and time, so never show up without your calendar. So let's see what happened during the news. You can see that Nasdaq went to make a higher high, while S&P 500 is failing to do so. So Nasdaq is just taking out stops while S&P 500 is waiting for its brother Nasdaq to finish with damages, which is taking out stops, so that they can move in the same direction. Why? Because they are positively correlated. They are supposed to move in the same direction. So in this case, we have a confirmed divergence. So now you can jump to the lower time frame to stock your entry patterns. So we're on the 5-minute time frame. When I saw this, I was going to use the order block model to enter here, because this is the candle that took out liquidity. For S&P 500 is this one right here. So I just hated the size of the stop losses. So I entered early based on the 5-minute candle that took out liquidity. Notice that it doesn't have a wick above, so it makes it a trap candle. When you're looking at that candle, you will think that the next candle is going to look the same, or it's going to have momentum going up, like a super huge green candle following the previous one. But the right area to enter was here. Otherwise, you can jump to the 1 minute. On the 1 minute, you're going to use this order block right here. So your entry is going to move up. If you don't know how to use the model, watch the third video. It's only going to take you 3 minutes, and the trading plan is also included. So this is how this very trade look like on the live charts. You guys have been very supportive. If you made it this far, it means you are serious about your trading. So if you want to see more content like this, leave your comment down below, like the video and share the video. And obviously you must subscribe so that you don't miss out on the next upload. There's still more that I'm gonna share, and in the upcoming videos I'll try to include the daily bias before jumping down to the lower time frames. So guys, I'll see you in the next video. Das Vidania.